Hey guys, my name is Nick B, and let's get into this week's futures overview. As always, we have the calendar for X Factory. Monday, it's going to be pretty mute. Tuesday, mute. Wednesday, that's going to be the big day for the swings and volatility. Probably we have FOMC, Fed Powell, at 2:30 p.m. EST. Thursday, we have unemployment claims at 8:30 a.m. Flash manufacturing PMI at 9:45. And then Friday, we have Fed Chair Powell speaks again at 9 a.m. Okay, so we're going to get some moves, but this open, very interesting. We had a little bit of a gap up on the open, and I'm specifically looking for being NQ being above 18,075. So let me blow this up on the daily and we'll start breaking it down. Last week, I know that performance was, oof, that was tough. It basically gave back most of our gains from the previous week. So we definitely have some making up to do. I took a bad trip down the psyche lane, but all better, cleared up, clean. And let's take a look at kind of what's unfolding. So let's start with ES and look into what we see, not what we want to see. I think that was my struggle from last week. So there's no point in blowing it up more than, I mean, we could do 2 years, but there's really no point because the main structure we're focusing on is this one right here where our base was at 48.40, 48.42 area. That was kind of the last area we consolidated for a little bit, and then after we broke out, and here we are. Holding on to the 20-day exponential moving average on the daily as support as well. So with the pullback that we had last week, we have some room to keep coming down towards at least 51.32. And if 51.32 on ES can hold as support, great. We may see a bounce and specifically get us back above, I would say 5200. That would give us maybe a little bit of headroom to head for 52.53. And on a break of 52, 53 and a half, we can look at 5300 as target to the upside. Now, if 5130 fails to hold on the daily for ES, definitely I could see some more downside. And I think my first level of interest is going to be 5065. That is, I think, the base of the previous higher low of 5065. We had a nice breakout from that area, retested it not once, but twice, solidified it, and kept it going. So let's see how we hold up around 5130. Does that hold? If so, great. We'll see a bounce. We may get some headwind to the upside. Now, again, if 5130 breaks, we definitely have room for 5065. Let me break this down to the 4 hour now. I should probably place an alert at 5130 as well. That's going to be a bit of our guidance level. Okay, at or below. Okay. All right, so 5065 is roughly this base right here. And now you could see how well it was a previous all-time high, right? We came down a little bit, formed new higher lows right here at 49.40, also at 49.60. This is going to be an important level. I'll break this down in a second. But we broke back above 5065, reached as high as 51.21, then came down for a proper retest and continued on higher again. So this is definitely a floor of interest if and when we do reach it. And I think the first kind of sign where we're going to see really, okay, we might see finally a pullback, call it a correction, come to fruition is if and when we do break below 5065. Until we get to that area, I honestly think that the dip keeps getting bought. As far as the fundamental side of the market, that's not really always my main focus. I look for just a reaction after the events, but from all the news that we had the last 2 weeks, CPI, PPI, retail sales, NFP, unemployment claims, and we're still not able to puncture our previous higher lows. And the main higher low, again, that I think is going to really speed up the process to the pullback is going to be at 5065. So I'm going to place an alert over at 5065 as well as a bit of a mile marker for really the start of a pullback, if we even see that. Because again, the first focus right now for me is, can we continue coming down to 5130 on the daily and then bounce off of that area, or do we break down, we spill over? And again, I think the green light where I could have a clearer conscious shorting is on a break of 50.65, and the target to the downside is going to be 49.60 as the previous higher low that we just went over. So 49.60 would be the target to the downside. Again, let me just cover the upside potentials here. Honestly, if I want to have a clear conscience and I want to take a safe long, I would go long above 52.53, easily target 5300, and have a stop, trailing somewhere close below. I would put it at the previous lower high, which would be 5230. I think that would be a fair setup. Now, if we do catch a bounce off 5130, it would have to be an entry based off of momentum. Again, that's nitty gritty. That's in the moment type of stuff. I'm not a fortune teller. I can't predict how it's going to unfold. I can just map out the scenarios. But if we do see reasonable bounce off of 5130, we could go long on a whim off of that bounce. That price can come back up, but I don't think that would be a fair ride unless we're really swinging it. Unless you feel comfortable putting your stop to slightly below 50.65, maybe 50.60, and then you go long on a whim of a bounce of 51.30 and you target the highs. It's a little bit tough in the moment, so that's why I'm saying the kind of the safer entry would be break 52.53. We go for 5300. That's about almost 45 points to the upside, and we could risk 20 points to the downside. That's a 2-to-1 risk to reward ratio set up there. So that's fair. I'm going to leave this alone. I'm going to set the last mile marker for myself at the highs of 52, 53 and a half. 52, 53 and a half. Okay, so that's with ES. On to NQ. Man, this was a tough cookie last week to crack, but I'm definitely feeling a little bit better about it into this week. So let's pull this up. Let's expand it. Again, yeah, 2 years is fair. We don't really need it, but okay, let's start kind of looking over the price action here. So I'm going to correlate it to where ES was. So I did what, like we just went over, 48.40 on ES was the last kind of platform where we formed a base where we consolidated for a little bit and then price was able to break out of that area and head higher. That's going to be over on this level here. I'm gonna leave this alone. 17,165. I'm gonna go ahead and say it's a stretch. Look at us at 18,090. As I was mentioning last week in the chats as well, 1875 was that main support level for me on the daily for the Nasdaq. So as long as the Nasdaq can hold 18,075, we could see our way of price action working its way back up to 18,100, 18,150. We'll break this down on the smaller time frames, but let's get an idea of kind of what's happening. So it was a volatile kind of grind to the downside last week, but we're finally at our 20-day EMA on the daily. Now, here's something I have to kind of point out here really quick. Um, Let me pull up ES on the daily. ES seems like it's bouncing right now, right? And we might come up to 5230 maybe to test that wick there, or maybe this candle decides to unravel and we head for 5130. NQ is already at its 20-day EMA. So if ES decides to continue pulling back down to 5130 for its touch up of support, well, NQ definitely can revisit some previous higher lows. And we're gonna have to break this down on the smaller time frame to really identify the floor, because the only realistic thing I see for NQ here, at least on the big picture, is we get a break of 18,075. We have room to come down to 17,830. I would say even 17,900 conservatively, but 17,830, that would be a bit of an aggressive push to the downside. And the only reason I bring that up is because 17,830 is on par with ES's 5065 level as a previous higher low. And let's break this down to the 4 hour, because again, we can't tell much. The only realistic thing I can say is if we can get a break of 18,506.75, we could take a look at targeting. We could use the round number theory. I would target 18,700 to the upside, but we would go to 18,550, then 600, 650, ultimately targeting 700. But let me place that alert to the upside here for now. Okay, so we have that. Okay, and again, we're seeing that bounce, but can it really bounce? I don't know. We'll have to see. In terms of the base that we've had, it's too far right now from price action where it's at 17,157. So I'm gonna leave this alone. Let's break this down to the 4 hour. I feel like I'm yapping too much now. Okay, so again, this is still a bullish kind of structure here. We are pulling up to the upside. And this area right here was a previous all-time high over at, was it 18,144? Ultimately, last week on Friday, when we finally got that little bit of a push below 18,144, I saw that price action was able to spill over lower. Here's my problem with these areas here. I have no sustainability between these price action because this is new price discovery. We haven't quite formed any real support resistance levels. So if I'm going to trade what I think I see, I'm going to get the results that I did last week. That was my mess up, just underlining that. So if we want to play it a little bit safer, you know, I guess my first instinct was to look at the previous lower highs of 18,325. Then we could take a look at 18,427, targeting to the upside. However, I don't feel comfortable doing that until we get a break of the highs just because of how price action was treating us last week. Then again, I want to reiterate in the moment, if the momentum's really showing us that we have an opportunity to go on a whim and go long on a breakout with momentum, we could take it as long as the risk is tight. But I honestly do not see anything on NQ yet in terms of upside, downside. We came down to 18,000 last week and we bounced right off of it. Again, yes, on the daily, we are above 18,075, but my issue is that's not exclusive right now because ES still has room to come down to the downside. So if ES starts to fall, kind of push a bit lower, NQ might follow along, or NQ might end up just chopping between this range here. And again, I don't want to fall into the timing of price action category. So I would much rather wait for, let's see, if we break below 18,000, I'm only going to look at the price action as in floors. So I would place an alert here at 18,000. That's going to be my first breakdown. And I'm going to look to target 17,900 first. Below, yep. Why? Well, right here in this area, it was on the 4 hour, a previous higher low right in this section here. So that would be my first target to the downside. But ultimately, again, for us to really see that fruition of a pullback or correction, if you will, I really think we need to get below 17,830. And again, 17,830, at least from how I'm seeing price action, is on par with ES's 5065 breakdown. So if we see 5065 breaking down, we can assume that price action might be at 17,830. Let me take let me take a look at this on the 1 hour because I really don't see anything here. Uh, you know, we can, again, we can go on a whim and go long above 18.1, but why am I timing this? I don't know what to expect out of Tuesday, Wednesday, or even mainly Wednesday's volatility with FOMC, even though, supposedly the rate's not going to be changed, which in theory and statistically it shouldn't, but we'll see. I much rather get away from this noise and what happened here, and go for something clear. Maybe if we can get a clearance of, I would say honestly, 18,340, this lower high area, this zone right here, that could give us room to come up towards 100 points towards 18,425, maybe worthwhile to ride. Again, I'm looking at it in terms of swinging, in terms of trend direction rather than these intraday moves because it's really tough to time them. You got to be really on top of it, and unless we're doing it live on the radio, I don't think it's very feasible to kind of put it out as signals. And partially also that's incorporated into last week's mistakes. Those were 20 pointer, 50 pointer moves. Sure, we had swings of 90 to 100 points during the day on NQ, but again, something we had to be really on top of it. That was difficult to weather, but all good. We have our opportunities for this week. I'm definitely favoring ES more for this week just because of how clear kind of the breakdown is. It's either we break out above 52, 53 and go higher, or we come down to 51.30 and bounce, or we break down and eventually we get the green light at 50.65 to short. Now again, if we come to 50.65 and bounce off of that area, similar on NQ would be 17.830 and bounce off of that area, great. We could just kind of reverse our steps and use the previous breakdown levels as our resistance levels to the upside. But other than that, I mean, that's all she wrote. That's all I'm looking for. Just strictly price action. Again, I can't give much on NQ just because it's funny money here. There's no real support resistance. If we take a look at this even on the 1 hour, and let's say we want to talk about identifying a floor, well, we have a floor identified and it goes from 17,830 all the way to 18,506. Everything here in between, you know, on the intraday, again, maybe if I'm live with you guys and we're sitting through it, sure. But in terms of, swinging for direction, you're either going to get a break of the highs and go higher, or you're going to break the higher lows and go lower. That's it. Um, and again, the reason I say that, and I'm going to be a little bit more adamant about it this week, is because partially what was a bit of my mess up last week was trying to trade what I think I see versus what was really going on. So, with that being said, that is all she wrote. I hope you have a solid trading week ahead, and we'll catch you into the week. Cheers.